Welcome. It's Tuesday, 11/19, November 19th. This is the second time I recorded this one. Unfortunately, the first one, the microphone, this handy-dandy microphone, didn't do really well. It was very bad audio, so hopefully this one is better. Today we're going to talk about cash flow. Number one thing in our situation when it comes to helping people in debt is understanding what their cash flow is. It's step one of our three-step process. The reason why it's so important is we want to see exactly how much money someone has left over at the end of the month before they start making their debt payments towards their debt to pay off their debt. And again, all of our content and these videos are for someone who is looking to get out of debt, right? So in that first step is understanding your cash flow. So what does that actually mean? Well, there's about 6 or 7 questions I'm going to go over that's going to answer all your questions when it comes to cash flow. And if it doesn't answer any questions, feel free to text me, 619-332-1019. Text me, ask me a question. I'll be able to answer it for you either on here or I'll answer it through text message. So let's talk about some cash flow. The first question is, why do we focus so much on cash flow and why is it important? I'm really self-conscious right now about this microphone. I'm hoping it sounds like it's going okay. I think it is. But why is it so important? It's because before you determine what debt strategy and what debt-free option that you're going to choose, you need to know exactly what your financial situation is on a monthly basis. The majority of people who are in debt don't have a bunch of money in the bank. They don't have a bunch of money left over. So by looking at what your housing is and where your money is actually going, we want to be able to see how much money is left over before you start making payments towards credit cards or unsecured personal loans. So we did create a cash flow calculator, which I'll put in the comments below, or if you're seeing this on Instagram, you can actually take a look in our bio. There'll be a cash flow calculator there. It really helps out because it'll show like your housing costs, your transportation, your food, all the essentials, utilities, and then you'll be able to put in how much money you're making on a monthly basis after taxes, and it'll give you a number. This is how much money is left over at the end of the month. Then you start putting in your payments to your credit cards, and you're going to see how much those payments are taking away from your actual income. And if you didn't have those payments and you didn't have that debt, you'd be able to actually start saving and investing more money into the things that are, good for you, Paying high interest is not good for you. I don't care what anyone says. Paying interest rates, compounding interest on credit cards is not the best thing in the world. So the next question is, how do I determine my monthly cash flow? We kind of just went over that. Again, we'll have a link below that'll go to our cash flow calculator. Again, you just put in your housing, transportation, food, utilities, any excess amounts of money to put in your net income. That's how much money you're making after taxes. At that point, you're going to see that figure that's going to show you this is how much money you have left over after you pay your utilities and expenses. Then you're going to put in your debt payments because you're going to have, your minimum payments that you're paying on a monthly basis. So once we actually can see that figure of how much you actually owe, then we can get to that step 2 of understanding what debt-free strategy is available for you, whether that's, trying to obtain an unsecured personal loan, whether that's, using a strategy like the snowball method or debt settlement or debt management. Once we actually know that monthly cash flow, it really opens things up to get us into understanding exactly what options are available for your specific situation. So next question we have is, how does cash flow affect my options for getting out of debt? Again, we just kind of went over that, but depending on how much money you have left over is going to determine what option is going to be the best for you. Let's just say, for instance, you had bad credit. Let's say that for some reason something happened in your life and you're unfortunately were unable to make payments towards your debts. But now you're back on your feet and then you have a tremendous amount of money left over after paying your utilities and housing and transportation and all that. You can look at options like debt settlement or the snowball method, which we get into these options in videos and previous videos. But if you have questions, feel free to text me, 619-332-1019. I'll definitely be able to help you out. But yeah, it's going to determine what options are available for you. Like again, personal loans, debt settlement. It's a handful of options that are out there for you depending on your financial situation. So understanding that monthly cash flow is the key to it all. Next question. My cash flow is negative. I spend more than I make just trying to get by. What are my options? Text me, 619-332-1019. We'll be able to help you out. If you're in a situation where most people that we talk to are in those three situations, whether they don't have money left over at the end of the month, they don't have any money in savings, and they don't foresee an increase in income that's going to allow them to pay more towards their debt, you have to look at options to lowering your expenses. And you look at a strategy like debt settlement that could be effective for someone in that situation. Maybe even bankruptcy. Again, we're not bankruptcy attorneys over here, but if you're in a situation where you can't afford anything, that would be a suggestion from my standpoint. Okay, how does a loan affect my cash flow? Well, when you're dealing with credit card debts, unsecured credit card debts that have compounding interest, even if you're paying an interest rate of 8%, which is super low for a credit card, it's still compounding interest. When you're dealing with a loan, it's a fixed interest rate in the majority of the cases that are out there. It's like, okay, for the next 5 years, I'm paying this amount every single month, and it's a fixed interest rate. It's going to be way better than dealing with compounding interest and making minimum payments. So a personal loan in most cases will probably be very similar to what your current payments are towards your minimum payments, but it's fixing everything. Sometimes you save some money, and again, it's all dependent on your situation, but getting into that fixed payment, that fixed term where I'm making this payment every single month for the next 60 months really gives you a situation where you know how much money is coming in, you know how much money is going out, and then you're able to adjust your your expenses so you can start saving money and paying off your debts. So the next question is, how will debt settlements impact my cash flow? Well, with debt settlement, the risks, I should say, the cons to it are in a situation where you have to fall behind and go through default. And that's not because a debt settlement company is telling you to do so. That's just how the strategy works. Right now, if you're in a situation where you're only affording minimum payments, all the leverage in the world is on the credit card company side. All the leverage. They want you making that minimum payment for the next 25 years. And I know you probably heard me say this before, but just go ahead and take a look at one of your statements, the credit card statements. It says by making a minimum payment on this account, it's going to take me 25 years, 30 years to pay off this debt. So what debt settlement does is, the pros of debt settlement is it gets you into a lower monthly output towards your debts, and it also gets everything in a short period of time. You're going through this in a 3-year or 4-year period of time compared to sticking to those minimum payments for 25 years. I think that you would see there's a huge savings there from a financial standpoint, especially if you're struggling financially. So that's pretty much going to wrap up how cash flow works. Again, I'm going to put the link to our cash flow calculator in the comments. If you're seeing this on Instagram, it'll be in our bio. Just take a look at it. Fill out that information. You can see what your cash flow is. You can email it to yourself. You can put your email and your name, and you can email it to yourself. So I hope this answers all the questions on cash flow, as it's super important, especially into our process of helping people get out of debt. I hope the audio worked well this time. And until the next time, which is going to be tomorrow, see you later.